Happy morning, people. So, welcome, and we will be starting our first topic in our CA Final Financial Reporting Fast Track batch, and we'll be starting with a topic called IND AS 16. IND AS 16 talks about property, plant, and equipment. Now, people, before I dive into the topic, I'll just tell you that FR as a syllabus consists of only IND AS. IND AS in CA Intermediate may we learned accounting standards. Those are local standards. IND AS is nothing but your international standards ka Indian version. We have IFRS, right? IFRS is nothing but your international financial reporting standards. Now India, no, we are Indians people. Emotional, no, we are high on emotions. Now we have not copy pasted IFRS. We did not take IFRS and just kept. We took IFRS as a base and made certain changes, because developed country ka economy and developing country ka economy cannot be same. Na? There are some differences. Hence, we have taken international standards and wherever required, we have made some changes. Hence, we don't call it as IFRS, we are calling it as what? IND AS. Because there are certain differences between IFRS and IND AS. Not many, hardly 3-4 differences are there, minor ones. Hence, in India, we call it as IND AS. That's all. And in our syllabus, we have to study only the IND AS. We don't have any separate topics. Our whole syllabus revolves around IND AS. That is one. Done. Another part is, sir, which company should follow IND AS, like where it is applicable. All that is faltu topic. Some parameters are there. Some conditions are there. For our simple understanding purpose, I will tell you listed companies. What? Listed companies. So basically, you are bread and butter. After qualification, you will obviously work for small companies or mostly listed company only. Mostly listed. So they all have to follow what? IND AS. So all of you will be working for companies who will be following most probably IND AS itself. Okay, that's your up. There are certain other conditions. Net worth conditions are there like this. There are few conditions which we will talk about it. In IND AS 1, it will come. Someday when we are bored, we will take that topic. First day, I don't want to bore you with all those some limits. That is just a simple vomiting. Remember and throw wala topic. We will do it someday after 25-30 days. Someday we will take it up. But in a simple term, you got it, no? Basically, listed companies have to follow IND AS. Now, people, many IND ASs are interconnected. So, I am starting with IND AS 16 because IND AS 16, if you know, it is connected with IND AS 38, IND AS 40. Like this, this standard is linked with 4 or 5 standards. So, hence, I'm starting this particular R session with IND AS 16 itself. And as I say, recorded students, you follow the same order. Please do not change the order, because I will say when I go to consolidated financial statement or financial instrument, I'll say we have done this in IND AS 16. Now, if you change the order, then you may not know like what we have discussed and all that. So kindly try to follow the same order, especially for the recorded student. Okay, IND AS 16 talks about what, people? Property, plant, and equipment. One good news is, remember in CA Intermediate, we studied Accounting Standard 10. IND AS 16, no, Accounting Standard 10, no, ditto. Absolutely no change. One concept is extra. It was there in AS 10. We had discussed. I had done one problem also there, right? That is being done or applied in a little better way here. Other than that, in fact, concept-wise, there is not a single difference between AS 10 and IND AS 16. That means whole standard homework. We have studied AS 10, no? If he's saying forgot, don't put it on me. Okay. But those of you who remember, these two are ditto. Absolutely no change. Fine. So I'm not giving it as homework. Don't spread rumors. So yeah, we will do it. Just saying that it will overlap. Okay. That is one. Now, people, you remember I told you in the intro class that we will be doing same coverage as we do in regular class. We'll also do it in fast track, but through certain shortcuts. What is that shortcut, in case you're wondering, is now this particular notes, I will share it with you. Okay, what that is. Now, if you just check, now this is, let's take small example. I'll quickly tell you. Let's say there is something called bearer plant. For that bearer plant, we have 3 conditions. This is the actual provision of IND AS 16. Now, usual IND AS provision, these are all law, right? Law ka words will be written fancy. I've just summarized it into smaller words. Fine. So this is one shortcut. So we don't have to worry too much about the provision. We'll directly focus on our layman language to understand, because they will not ask you straightforward provision. All this will come as a numerical application. So if you can remember the exact words, great. Otherwise, even this will also be fine. You can write in your own words. It's okay. This is one shortcut. Fine, people. So in regular class, usually I write this. Usually I'll explain the concept and all this I will write. But in fast track, we don't want to waste time with all that stuff. This is already written. So we will just go through that. That will save us some time. One approach. Got it? Another one is questions are there, right? Questions here. 1 minute. I'll just show you one quick question. This question number 1 is there, right? In regular class, we will solve this question fully. But here, it's solved. We will go through it. Don't worry. You will understand it also. Fine, people. That way, what happens? Every question what we do in regular class, we'll be able to do it here. And this file also, I will share it with you so that it will be there as a reference file. Done, people. You let me know if you want me to share this file before the class also, I don't mind. That is also okay with me. Fine, people. It may not be in exactly PDF printable format, but it is definitely PDF, so you can zoom in and watch it out. This is the method we are adopting to cover the class quickly. Did you understand the funda of our approach basically? That way, I'll be ensure that the coverage is good enough. So with this in mind, can we come back and start off the topic, people? Okay, what's the first standard we said? IND AS 16. That talks about what? Property, plant and equipment. Basically, IND AS 16 gives a guidance as to how property, plant and equipment should be recognized, disclosed, etc. etc. Now, people, why IND AS 16? The background, if you'll have to understand. People, is plant and machinery. Now, property, plant and equipment is nothing but your fixed asset. We don't call it as fixed asset anymore. Now we become sophisticated students, and the new name is what? Instead of fixed asset, we call it as property, plant and equipment. Just the name changed. Instead of fixed asset, we call it as property, plant and equipment. Going forward, we will call it as PPE. Done with the term now? Now, why do we have this IND AS 16? Sir, I'll give you a small example. You help me out here. Is furniture a PP? Is furniture a property, plant and equipment? Yes. Okay. Is machinery a property, plant and equipment? Yes. Building? Yes. A company, let's say Infosys, they have gym equipments. Normally in the offices, there will be some gym and all. What about that gym equipment? Is it PP? What about the painting inside the office? Is it a property, plant and equipment? What about the table tennis machinery which is there in the Infosys office? Is it property, plant and equipment? Pakka or some confusion is there? Some confusion is there. That confusion only is sorted by what? IND AS 16. Few assets are very straightforward. We can answer it straight away. But there are some assets like paintings or the water filter, right? All the gym equipment, so sports equipment. So are they property, plant and equipment or not? We cannot say with 100% certainty. There is some clarification required. So hence they've introduced a standard called IND AS 16. What and all are PP, what are not PP is what guidance IND AS 16 is trying to give. Understood, people? That's what I've written here. Are we okay with this, people? Done. Now what? I'll not give you an answer for all this. Gym equipment, sports equipment, to all this are PP or not. We will understand it a little later. But to know whether they are PP or not. Now what IND AS 16 says is, they have given 5 criteria. How many? 5 criteria. 3 definition, 3 points relating definition, 2 points relating recognition criteria. 3 points relating to the definition, 2 points relating to recognition criteria. If all the 5 are satisfied, it becomes what? PP. If it fails, it is not a PP. Such expenditure will be expensed off, meaning transferred to P&L account. Here we will not call it as P&L. I'll use the term SPL. SPL means statement of profit or loss. Instead of P&L, if you use the term here, SPL. You can use P&L also, it's fine. But most of our ICA books will use the term SPL, so we'll go for that. Done, people? Done. Now, what is that definition? First, now anybody remembers, it is the same thing as AS10. Let's test our memory. Let's go back 1 year or 1.5 years when we cleared AS10. What is AS10 ka? Anybody remembers? Okay, no problem. Okay, 3 things. 1, if you want to call a PP as a PP, the definition is 1, it should be a tangible asset. It should be a tangible asset. Second one, it should be held for use. That usage could be either production of goods or rendering service or administrative purpose or rental purpose. Any of the 4 purpose. And that usage should be for more than 12 months. or 1 period we say. If all these three are satisfied means then we say PPE ka definition is satisfied. Okay, once more. What is this now? Tangible asset. Tangible means what, people? We must be able to touch or see and feel. So if you want to call it as a PP, you should be able to see them, touch them and feel. That is the first basic one. No problem, I'm thinking. Next is what? Held for use, meaning that PP, you should use it for some purpose. You should use it for some purpose. That purpose could be any of the four. What are those any of the four? Either you should use it to produce some goods, right? Like factory machinery, you'll use it to produce the goods, right? So that is one. Or you should use that PP to render some service. Now we are using this AC, laptop, iPad and all to render a teaching service. So it's a PP. Or it should be used for administrative purpose. So people, this is the keyword. If this word admin was not there, many PPEs would have not been shown in our balance sheet as PPE. They would have got expensed. Like, now people, we have installed AC in the classroom. Is AC required to deliver a class? And now even Bangalore is becoming hotter, right? Now AC has become part of our culture, right? And now maybe you are saying no because you are final students who are attending in the morning. You already have, your body is like little cool, you are okay. Now you should come to the intermediate class in the evening. There will be more than 150 students. 5-10 minutes if AC goes off, they'll be like labo. Yeah, they'll be like AC remote kodunga sir. Ayyo, karma kanda. You should see. Because now they can't survive even 10 minutes without AC. Now you tell me, AC is definitely used to render a service, correct? But the same AC, if I put it in receptionist area. Now if you go to our receptionist area, there is AC, correct? Is that PP? Am I getting any benefit from that? No. Because currently actually, like for our benefits we'll get from our classroom, right? So AC installed in classroom is definitely used to render a service. But the same AC, if you're putting in a receptionist area, we don't conduct classes in receptionist area, correct? So what PPE says is not necessary that you have to use that asset to produce goods or render service. Even administrative assets are also PPEs. Even receptionist is required for us to conduct the operations, right? So they all come under which category? Administrative category. That means to go back, what about this gym equipment and sports equipment and paintings and all? They're all coming under administrative assets. So are they property, plant and equipment? Yes. Understood, people? So it's not necessary that from that PP you should be generating some goods or it should be used to render a service. Even administrative assets are also PP because it comes under the definition of PP. Understood, people? The last one is it should be held for rental purpose. Maybe if you have let out that PP, that is also an acceptable purpose. You are not using it, but rather you have given it to somebody else for their usage. Even the rental purpose usage is acceptable. Any of the four is acceptable for the held for usage purpose. Any doubt so far? No? Okay. Last one is what, sir? So PPE means it will come for less than 1 year or more than 1 year? More than 1 year. That is what is the last criteria. That means that PPE should last for more than one period, meaning it should last for more than 12 months. If all these are satisfied, then we say PPE ka definition is satisfied. Now people, I have one habit. I don't know, good or bad. Okay. If I don't pass it on things to you. Like I don't say you remember it. The way I conduct my classes, I'll try to remember it and I'll make you remember it. For that, I feel the best way is to constant recap. Is it okay? I'll make you constant recap the thing so that we learn everything in the class itself. Would you be fine with that? This approach will take 10 to 15 minutes extra on a day-to-day basis. But I feel it's worth it. It will reduce your burden in your house. Would you be fine with that? Yes. Okay. So now, again, tell me, sir. PP means it should satisfy 3 definition criteria. What was that? 1, it should be a tangible asset. It should be held for use. Use could be either one of the 4. Producing the goods, rendering a service, administrative purpose or rental purpose. That usage should be for more than 12 months or 1 year. Okay. This is your definition. 3 we have already covered. I said for PP there are 3 or 5? 5 criteria. This is PP ka what? Definition. Now PP, if you want to show that PP in balance sheet, there are 2 recognition criteria. We'll call that as RC. 2 RC, recognition criteria. Anybody remembers that? It is the same as AS10 ka. FEB and cost measurement. Same term I used to use in AS10 also. FEB and cost measurement. FEB for future economic benefits. Future economic benefits. CM for cost measurement. Meaning, what is this trying to say is, sir, will anybody invest in PP without having any benefit, or there will be some benefit? That is what first recognition criteria is trying to say. From that PP, company should get or entity should get some benefit. It's not necessary that the benefit should accrue to the entity immediately, right? Even if the entity feels they will get the benefit in future, it is acceptable. You might already be getting the benefits, or if you feel benefit, you will get it in the future. That is also acceptable. That is your FEB, future economic benefits. So benefits means what in all, people? How can we say there is a benefit? Now, let's say from that PP, due to that PP, sales has increased. Is it a benefit? Yeah. Cost has reduced. Is it a benefit? Yeah. Indirect benefits are also considered as benefits. Now you have a massage chair. No, companies keeps all fancy things. No. From massage chair, will it lead to increase in sales or decrease in cost? No. But it will relax the employee. So if employee ka mental state is good, means maybe he'll deliver the job also better. Correct? Those becomes what? Indirect benefits. Even indirect benefits are considered as a benefit for FEB purpose. Done, Sarji? That is your FEB. Any problem? Now this is simple. Look, cost measurement. Cost measurement means how much we have spent for that PP, we should be able to measure it reliably. And this is easy, no? If you're buying a PP, means obviously you will know how much money you've spent. Even if you're constructing PP, you'll obviously know the construction cost. Basically, the cost of that PP, you should be able to tell it reliably. So if PP ka definition as well as recognition criteria both are satisfied, means then only you can show PP in balance sheet. If these 5 criteria, if it is not satisfied, then all such expenditure will be transferred off to SPL, P&L. That's all. So far we have seen only PP ka definition and PP ka RC. Done, Sarji? Can I move on to the next? Like this, we have around, you could say around 15, roughly around 15 small concepts. Remaining are all questions. Fine. Okay, next. Now, IND AS 16 is not applicable for few assets. Exclusions, you could say. One, if you have any PP held for sale. If you have any PP held for sale. Held for sale means you have not yet sold, but you are planning to sell. If you are planning to sell any PP, for such assets, we have a separate standard called IND AS 105. Since there is a separate standard for such assets, IND AS 16 is not applicable. For which asset? Asset already sold or held for sale? Held for sale. That is one. Another one is if you have any biological assets. If you have any biological assets which are used for agricultural activity. 2 criteria is there. Biological assets held for agricultural activity. Biological assets means living plants and animals. The plants and animals, we call it as what, sir? Biological assets. Now, some people will be cow farming and all. They'll have cows, goats and all that, right? Such living plants and living animals we refer to as what, people? Biological assets. If such biological assets, if they're used for what activity? Agricultural activity. If you have biological assets which are used specifically for agricultural activity, then we have a separate standard called IND AS 41. There is another standard called IND AS 41. Hence, IND AS 16 is not applicable. But keep in mind, bearer plant is not a biological assets. Read this line once again. Biological assets relating to agricultural activity other than bearer plant. Meaning, for bearer plant, IND AS 16 will apply. For other living plants and animals which are used for agricultural activity, which standard will apply? IND AS 40. Okay, sir. Now, 3 terms we used. One is biological assets. You know the meaning of biological assets? What is that? Living plants and animals. What is agricultural activity? That definition we will see in IND AS 41. But now we know agriculture, what it means. That definition only we'll keep it. But bearer plant, will it come under biological assets? No. For bearer plant, which standard is applicable? IND AS 16 only will apply. This standard only will apply. Sir, what is the difference between this biological asset and this bearer plant? For that, let's understand what is the definition of bearer plant which is given over here. It's the same thing. I remember you used to give mango tree example. Yeah. Anybody remembers what is bearer plant to?
It bears fruit for some time.
Correct. Correct. Okay. Is like I said one, no? Best balance you complete, macha. Done. Okay. Sir, bearer plant means, see, bearer plant is also plant only. Bearer plant is also a plant only. But for this plant, IND AS 41 will not apply. Which standard will apply? IND AS 16. Right? So what is a bearer plant? Bearer plant is a plant. If you want to call, let's maybe look at it this way. Let's say there is a mango tree. There is a mango tree. Let's test whether the mango tree is a bearer plant. If you want to call a particular plant as a bearer plant, 3 definitions should be satisfied. 1, that plant should be used from that bearer plant. No, you should get some agricultural. You want the exact definition or simple words are enough? Simple words are enough. Fast track batch, let's not go into the exact things and waste a little time. Is this okay with you? Okay. So, if you want to call a plant as a bearer plant, from that plant, you should get some agricultural produce. You should get what? Agricultural produce. So, from mango tree, what will you get? Pineapple. What will you get from mango tree? Mango. Mango is a factory produce or agri produce? That's the first condition. If you want to call a plant as a bearer plant, means from that plant you should get an agricultural produce. So first condition of our mango tree, is it satisfying or failed? Satisfied. Second one, no? Sir, for bearer plant, which standard is going to apply? IND AS 16. IND AS 16 means property, plant and equipment. PPEs will be in our business for less than 1 year or more than 1 year. So the same condition has been pulled out here. Now you tell me, from that mango tree, if you want to call mango tree as a property, plant and equipment and apply IND AS 16, you should get mangoes for less than 1 year or more than 1 year. So that means this agricultural produce, what you get, no, it should not be for less than 1 year. It should be for more than 1 year. Because PP means it should last for more than 1 year. So this agri produce, you should get it for more than 1 year or 12 months. So my agricultural knowledge is very limited, but as far as my knowledge goes, if you have a mango tree, from that mango tree, you will get mangoes for more than 1 year. That's my limited knowledge. If it is if it is otherwise, don't argue with me. I don't know much. Okay, there are. So this is the second criteria. Any doubt in this? Third criteria, what they say is, now people, if there is a farmer, if a farmer is growing a mango tree, from the mango tree, what will he get? Mangoes. What do you think farmer will do with that mangoes? Sell it? Once in a blue moon or regularly? Regularly. That means something which you sell in the ordinary course of business. Is it PP or inventory? Something which you sell as part of your ordinary course of business is a inventory. That means for a farmer, mango is a inventory. Correct? Mango is a inventory. Now let's say there is this one farmer. What his idea of business is, he will grow the mango tree. From mango tree, he will get what? Mango. He will sell mangoes. Once he's plucked all the mangoes, he will cut the tree. He will cut the tree and sell the tree also to the timber industry. Because for furniture also we need trees. That means farmer is selling mangoes also and he is selling mango tree also. Once in a while or regularly? Here, what did I say? This farmer ka business is this. That means every year he does this. That's my example I'm trying to take. Every year, what does this farmer do in my example? Sell the mangoes and also sell the mango tree. Now you tell me, is that mangoes is anyway inventory? Mango tree, is it a PP or inventory? Inventory. Why? Because he's selling the tree also in the ordinary course of business. That should not happen. If you want to call it as a bearer plant, that tree should be sold regularly or it should not be sold regularly. This is the third criteria. The tree should not be sold in the regular course of business. If tree also is being sold, if that plant also is being sold in the regular course of business, then that plant is not a bearer plant, it will become inventory. For inventory, we have IND AS 2, separate standard will apply. Okay, people, only that agricultural produce should be sold. Plant should not be sold. Rather, plant should be protected. That is what third criteria is trying to say. Easy now. Okay, people. No. So that means tree should never be sold, sir. Sir, tree should not be sold in the regular course of business. Suppose the tree has become sick. It is giving weird colored mangoes, black color mangoes it is giving. Now that farmer will keep the tree or cut off that. Cut off that tree and try to put in a new sapling. Yes or no. So if the tree, you can sell it as a scrap sale. You can sell it as a scrap sale, but you should not make a regular sale of it. That's all as a third criteria or third criteria trying to say. Manageable, people. Okay, Pakka. Now you understood what is it? This is the bearer plant. If these conditions are not satisfied, then if these conditions are not satisfied, then it is not a bearer plant. It's a normal plant. If a normal plant is used for agricultural activity, means IND AS 16 will apply or IND AS 41. IND AS 41. Like eucalyptus tree. Somebody, if they grow eucalyptus plant, from that eucalyptus plant, you generate oil. So normally what the farmers do, eucalyptus plant, they grow, they plucked that plant and sell it off to the industry. Correct? No. That means that is not a bearer plant because that plant itself is sold in the regular course of business. Understood, everybody? For such, we have another standard, it will apply. Clear, clear, clear? Okay. Once quick recap we'll do. Now we have studied what? First, definition. What is the definition of PP? It should be a tangible asset held for use. That usage could be either to produce goods or render a service or administrative purpose or rental purpose. And the usage should be for more than 1 month or 1 year or 12 months. And two recognition criteria is FEB and cost measurement. FEB means future economic benefit. How much cost for the PP, you should be able to measure it reliably. Now, is IND AS 16 applicable for held for use or held for sale assets? For held for sale, we have IND AS 105, separate standard. For biological assets which are used for agricultural activity, is IND AS 16 applicable? No. What does biological asset means? Living plants and animals. But is bearer plant considered as a biological asset or it's considered separately? For bearer plant, which standard will apply? IND AS 16. For other plants which are used for agricultural activity, IND AS 41. And one more exclusion is exploration assets. Exploration assets. Like you will have coal mine, gold mine and all. No? For exploration assets, we have IND AS 106 separate standard. Hence, they are also not included. Okay. Now, bearer plant. If you want to call plant as a bearer plant, 3 conditions. What is that? From that plant, you should get agricultural produce. You should get that agri produce for less than 1 year or more than 1 year. More than 1 year. Plant should be sold regularly or it should not be sold. It should not be sold in the regular course of business. You should only sell it as a scrap. If all the 3 are satisfied, means then it becomes a bearer plant. If it is a bearer plant, again, which standard will apply? IND AS 16. That's all we have done. Done. Okay. Next, spare parts and standby equipment. Online also so far good, no people? Can I move on? Can I move forward, people? I'll share the file with you. You don't have to worry about the writing things. The same file exactly, I will share it. Okay? So that it will ease in your work. If you want to make a quick notes of it, I don't mind. You let me know. I'll give you a little time. Not too much. Okay. Done. Great. Or maybe before I proceed, one question I will ask you. Personal. Positive. Okay.
Yes.
Articleship student. Articleship poringla. You're going. Hogta idira. You're going for articleship or are you on a study break? Honestly tell you. Based on that, I can plan few things. How many of you articleship here? Articles. Online. No? Others who have not answered, that means you are not going for articles. Okay, few of you are going for articles. So, okay, why am I asking you this? Is it okay for me to extend by 15-20 minutes on a daily basis? I wanted to know that. Instead of 9:30, can I take it till 9:45, 9:50? Would that be okay? Because it's a long duration class, no? 15-20 minutes extra means it will save us some 4 to 5 days in the long run. So if you are okay, right? I can try to take by 5 to 10 minutes. Here, okay now. Here, all okay. What about others? Study break. So that means we can take till 12 o'clock also. No problem at all. No. Study break is good only. Palani Appan. I think, Macha, currently you are the only one who's having a reservation, Macha. 5 to 10 minutes. Okay, Dada. Can you convince your boss? Is that a possibility? If it's not possible, we'll try to wind up on time. But if we can, then we have a scope to finish like 3-4 days early. You're going to start articles, huh? That is okay. Fine, sir. We'll try. What about Yuva Raja? Yuva Raja Edumalai. You're going to start, no macha. Starting when nobody works, noda. Starting period is honeymoon period. No work. Huh? Okay, no worries. Let me know. Maybe we'll keep it as that day to that day. If you feel on a particular day, you feel like I have to go early, means you let me know. I'll try to wind it up on time. Maybe instead of keeping it as like that, maybe day-to-day basis, can we take it up? Maybe today 9:30 I will ask you, wind up a tatastuna or continue for a little more. That way we will keep it. Would that work for you, everybody, online? Okay, no? Okay, that way we will try that. Fine, perfect. Then I'll move on to the next. Great. Spare parts, standby equipment. Spare parts and standby. Standby equipment means not yet used. Something we have kept it as a safety cushion. Like let's say we need 4 iPads. Let's say to conduct class, how many iPads? We need more. Just giving an example. How many iPads we need? 4. Now ArivuPro, we have bought 5. How many we need? 4. But we have kept 1 as extra. That extra becomes what? Standby. If something breaks down, if suppose this iPad is not working, yeah. If this one is not working, can we cancel the class? You wish, correct? No. But we want to keep one more so that we can avoid the class cancellation. Yes, that becomes what? Standby. Spare parts means what? Is it a whole PP or one part of PP? One part of PP. Suppose we have a machinery. When we have a big machinery, right? That machinery we have imported from Japan. Okay. So that means if that machinery breaks down, the parts we will get it locally or we have to buy from Japan only. Japan. Now we feel one part is very critical. One part in that machinery is very critical because it's a big part. If it stops working, whole machinery will stop working. Since it's a critical part and it takes about 1 month lead time. 1 month lead time, Andra? If I place the order today for this part, I will get it now or after 1 month? Now you tell me as a finance manager or the production manager, will I be able to take this risk or keep this part extra? I would like to buy off this part and keep it as an extra because we don't want to take a risk, because if this part breaks down, I have to wait for how many months? 1 month. Now 1 month I can't cancel my operations. No? So we may keep this critical part extra. That becomes what? Spare parts. Now what should we do for the spare parts of standby equipment? Very simple. If RC is met, what is that? RC, recognition criteria, is satisfied. Then even the spare part standby equipment, we show it in our balance sheet as PP. If it is not satisfied, then it gets classified as IND. That's one-liner. All this may be picked up for MCQ questions. They will not come otherwise. 1 mark or 2 marks maximum. Okay. RC met, PP. Otherwise, inventory. Can I move on to the next one? Next is cost of day-to-day servicing. Sir, if you have a PPE means there will be some repairs and maintenance. Repairs and maintenance you will capitalize. No, such day-to-day servicing expenditure or repairs and maintenance will not be capitalized. Rather, it will go up where? P&L account. I mean, this expenditure where it will go? Can I say SPL? Not capitalized. Such expenditure will straight away go up to SPL. Any problem in this? One-liner. Main funda, now it's examination time. Let's not go too much into everything of that. By the way, when are you writing your attempts, all of you? All of you, November 27, okay, sometime. Online, most of you, I'm assuming, are writing in November. I'm thinking. So, if your examination is very near, I would not suggest you to go deep dive into any provisions, because we'll have to focus more towards our coverage. So, I'll just tell you what is relevant for exam and we'll move forward like that. Okay, online also, okay, some people are there. Okay, fine, great. November 26, not much time. Okay, fair enough. Both the groups are one group? One group. Okay. AFM and all coaching over or after this? You're doing a recorded level of that. So this face-to-face and that simultaneously you're doing recordings. Auditing, I think, is a subject you like to do self-study, is what I've heard. Is that the you take recorded classes, or how does it work for auditing? I'm not aware. He's like, whatever we do, it's bouncer only. Nothing will understand. Why too much of complicated words to remember in auditing? So he's like, subject from intro only, it is like that only, sir. Yeah, we love auditing, but we hate it as a subject for exam, no? Okay, got it. No worries. Next, replacement part. So people, this could have a numerical significance. In fact, it is tested also. We have one question. I'll tell you what this is. Name itself is saying replacement part. That means one part of the PP we are replacing. Maybe that particular part is not working, or due to whatever reasons, the old part we are removing and inserting a new part. Are we replacing the whole PP or just one part? Just part. So if you buy a new part, what should we do? That new part ka cost, will you transfer it to SPL or will you capitalize? That's what is the concept we are trying to understand. Okay, we are not replacing the whole PP, we are replacing a part of it. Hence the concept name what? Replacement part. First I'll tell you exam mein what you have to do. Then maybe 1 minute quickly we'll spend why we're doing this. 2 points gets triggered over here. If you are replacing any old part, new part ka cost you capitalize if RC is met. New part ka cost you capitalize if RC means what again? Full form is recognition criteria. And what are those two recognition criteria? Web and cost measure. If though they are satisfied, a new part ka cost you will capitalize. Capitalize means you will add it to the cost of PP. But old part ka carrying amount you need to remove. Two things you'll have to do here. What is that? New part ka cost you add it to the cost of PP provided RC is satisfied. And old part ka carrying amount you need to remove it. Okay. Now let's understand this a little bit with the help of a small example. Do not have to write this example. We have a small question also in our book. We'll take care of that. But before we get to the question, let's take a small example here. Let us say people, I paid 20 lakh and purchased an electric car. What is the model, pa? Give me some model for electric car. What is it? Huh? Using Mahindra. That looks nice, no? But anyway, correct. That only, Mahindra only, no? No. So let's say 20 lakh rupees we paid and bought Mahindra ka electric car. Is it 20 lakh only? I think it's more, I think. Oh, 18, huh? I thought it was a little more. Okay, 18 is still okay. I think it's doable, I think. Yeah. Now, electric, sir, you're going to buy a, sir? No. Now, let's stick to the example. How much I paid for electric car? 20 lakh. Now, people, that particular car vendor told me, this car will come for how many years? 10 years. But that same vendor told me, car will come for 10 years. Aram se. Even in Bangalore traffic also, condition also, it will come. But battery you have to replace after 5 years. Battery will not come for 10 years. It will come only for 5 years. So electric car means it will have battery also. So battery is one of the parts of electric car. Okay, ji. Now just observe over here. Electric car now has two components. What are those? Battery and others. Why have I segregated into two parts? Reason is, sir, to calculate depreciation, we need a life. To calculate depreciation, we need a life. Battery ka life is only 5 years. Other parts ka life is 10 years. Now the question will arise, will this 20 lakh ka car cost, will I depreciate over 5 years or will I depreciate over 10 years? Because same asset has different parts and each part has same life or different life? Different. This we call it as component accounting. We call it as what? Component accounting. Meaning if different parts of the asset have different life. One asset only. Which is our one asset? Car. But that car has two components and those two components ka life same or different? So if one asset has different components and if components have different life means you have to calculate depreciation also separately. Meaning battery you will depreciate over how many years? 5 years. Other parts you will depreciate over how many years? 10 years. Like this you need to calculate depreciation separately. Nice music macha, but put it on silent. Yeah. Alarm ada. 7 o'clock, oh yeah, you wake up at 8 o'clock. No, so it makes sense. So yeah, 7 o'clock is keeping alarm. From tomorrow onwards, keep the alarm at 5 o'clock. Okay. Now, understood this. Now, this battery you will depreciate over 5 years. Other parts you will depreciate over 10 years. You can pass one journal entry for depreciation. Journal entry you can pass one. But calculation you need to do it separate. Why? Because life are same or life are different. If lives of a different parts have different useful life, means depreciation ka calculation should be done separate. This only we call it as component accounting. Journal entry you can pass on. Done, sir? Okay. Now people, let's say I have paid 20 lakhs for this car. No, in this 20 lakh, let's assume 5 lakh is for battery. 5 lakh is towards battery, meaning battery alone if you buy, it will cost how much? 5 lakh. Hence I'm saying out of this 20 lakh, 5 lakh is for battery. That means how much is for other parts? The balance. 20 lakh minus 5 lakh is how much? 15 lakh. Okay, Ji. Now tell me, battery you'll depreciate over 10 years or 5 years? 5 years, because battery will last only for 5 years. So what will be depreciation every year? How do you calculate depreciation? Straight line method. Cost to minus salvage value divided by life. Let's say salvage value is 0. So what will be the depre of battery? 5 lakh minus residual value 0 divided by useful life 5 years. So every year depreciation relating to battery will be how much? 1 lakh. Same depreciation relating to other parts will be how much? 15 lakh cost to minus residual value, I've assumed it to be 0 divided by useful life 5 years or 10 years. Other parts will last for 10 years. No, so divided by 10. So what will be the depreciation relating to other parts? 1.5 lakh. Correct, no? But both are car only, no? Both these are part of car only. So what's the total depreciation relating to car? 1 lakh plus 1.5 lakh. So totally how much? 2,50,000. You can pass one journal entry for 2.5 lakh in your books. But calculation needs to be done separately in your Excel or whatever. Done, sir? Now, you need a minute for this example or can I move forward? So far, numbers are okay. Now, people, when I bought the car, what did the vendor say? Battery will last for 5 years. Battery will ideally come for 5 years. But look at my Vastu. Bad Vastu. Okay. After 2 years only, battery damar. Thanks to our Shri Sidramaya ji. And our other people, our Bangalore road condition is so wonderful that after 2 years only, battery damar. We thought it will come for how many years? 5 years. But after 2 years only, the old battery it's not working properly. So I'll have to replace this with a new battery. When? After 5 years or 2 years? It can come whenever. In my example, I've assumed it to be 2 years. Correct, Sarji? Now let's say new battery will cost 6 lakh. New battery will cost 6 lakh. When am I replacing this? Now or after 2 years? After 2 years. This concept only we call it as replacement parts. Replacement part. Two things we said we'll have to do in replacement part. Anybody remembers that? New part ka cost you capitalize. If RC is met. Old part ka carrying amount you need to remove or derecognize. These are the two things. So let's understand that with the help of this particular number in terms of accounting. Now first thing, all this drama is happening now or after 2 years? First tell me what is the carrying amount of the car. How much did you buy the car for? 20 lakh. Totally car is getting depreciated every year. How much? 1 lakh for battery, 1.5 lakh towards other parts. Totally how much? 2,50,000 per annum. This drama is coming after 2 years. 1 year depre is 2.5 lakh, means 2 years it will be 2.5 lakh into 2, it's 5 years. You bought the car for 20 lakh, you have depreciated it by 5 lakh. So what will be the carrying amount of car after 2 years? Any doubt here? Done now. Now, did you replace the new battery? Yes. How much is the new battery costing? Or did you replace the battery? Yes. How much is new battery costing? 6 lakh. Will 6 lakh cost transferred to SPL or capitalize? Capitalize. Obviously, from new battery, RC will be there, no people. What is RC? Full form, I know, recognition criteria. But what are those criteria? Future economic. Sir, if you're buying a new battery, obviously there will be some future economic benefits. Cost also can be measured reliably. RC is failed, meta. So this new battery car cost transferred to SPL or capitalized? That means will the carrying amount of the car be 15 lakh? No. For this 15 lakh, you will add how much? 6 lakh. That's the first adjustment. You will take 15 lakh and add 6 lakh. So far good? Okay now? Everybody good? This is one section. There is an other part also you need to do. What is that is? Now people, in my car now, is old battery there or old battery is thrown away? Old battery we have thrown away. So if old battery is physically not present in my car, should it be present in my books? In my accounts, it should be present or removed from accounts also. If I have removed it from my car physically, I have to also remove its value from my accounts also. Hence the second part. What is the second accounting? Carrying amount of the old part you need to remove. Because that old part is no more there. Now it is removed, means from the books also it should be removed. Done now. So what is the carrying amount of old parts? Very simple. What was old part ka initial value? Out of 20 lakh when you bought the car, how much was for the old part? 5 lakh. Correct now? When are you doing all this drama? After 2 years. This old battery you're depreciating every year by how much? 1 lakh. Every year you are depreciating 1 lakh. Drama is coming after 2 years. So the old part has got depreciated for how many years? 1 year 1 lakh. 2 years 2 lakh. So you old battery ka value was 5 lakh. It has got depreciated by how much? 2 lakh. Correct? Old, see, I've written over here. Old battery ka initial value was 5 lakh. So far it has got depreciated by how much? 2 lakh. How 2 lakh? 1 lakh every year. For 2 years it will be 2 lakh. That means what is the carrying amount of old battery? 3 lakh. Is this there still in our books? Yeah, this 15 lakh is included in, or rather this 3 lakh is included in where? 15 lakh rupees. Understood now everybody? Now this 3 lakh, keep it or remove it? Remove it. So this 3 lakh we need to minus 6 lakh we need to add. Understood everybody? That means what will be the revised carrying amount of car as a whole? Revised carrying amount of car as a whole. 15 lakh plus 6 lakh minus 3 lakh. That means the revised carrying amount of the car will become 18 lakh rupees. And revised carrying amount when? At year 2 ending. At year 2 ending. Done, sir. This is your replacement part ka account. Everybody good? Now people, if what is straight line method ka formula? Straight line method depreciation formula? Original cost minus salvage value divided by like. First, it is not original cost, actually it is carrying amount. Let's break that myth. It is not original cost, actually it is carrying amount. Minus RV. RV as in residual value or scrap value. Divided by life, divided by remaining useful life. This is one. I proved it to you in my CA intermediate days also. Why it is not original cost, it is carrying amount. You want to spend 1 minute on this? Or okay? It is not original cost, it is carrying amount. Why do we say original cost is? Sir, when you buy the asset, original cost and carrying amount will be same. Okay. So if you want, maybe quickly we can do it also. Just for 1 minute if you want. Let's say people, we bought a plant and machinery for 10 lakh. Okay. Let's say residual value is 1 lakh. Useful life is 10 years. Calculate depreciation for me for first year under straight line method. First year, what is depreciation for the asset for first year? Calculation will be what? 10 lakh minus, because for the first time when you buy the asset, carrying amount to original cost will be same. 10 lakh minus residual value how much? 1 lakh divided by useful life. When you bought the asset, useful life was how much? 10 years. So what is the depreciation? 90,000. That's your depreciation for which year? First year. Any problem? No. That means, can you tell me what is the carrying amount of the asset at the year 1 ending? You bought the asset for 10 lakh. First year you depreciated by 90. So what is the value of this asset? 9,10,000. Okay, na sir. Now let's calculate the depreciation for year 2. In straight line method, do we actually calculate or we don't? We don't calculate because depreciation is same every year. Right? That's the reason we leave it at that. But even if you calculate, you should get different answer or same answer? Same, which is what? 90,000. So let's calculate with our new formula. What is that? Original cost or carrying amount. What is the carrying amount of the asset now? 10 lakh or 9 lakh 10? 9,10,000 carrying amount minus residual value still 1 lakh divided by useful life 10 years. Now we are in second year now. 1 year is already gone. I mean, what is the life remaining? 9 years. Now calculate. How much are you getting? 9,10,000 minus 1 lakh divided by 9. If you do, obviously you will get 90,000. Check. So actually the formula is not original cost. It is a carrying amount. Okay, now people. But since in straight line method, every year depreciation will be same, we don't calculate it. Hence, they say formula is original cost. But in reality, it is carrying. Why am I saying this is for the next calculation? So far, everybody got it up. This one. Everybody okay. Now come back to this example. So what did we do in this example? Give me a quick recap of that. Old battery you replaced with the new battery. New battery ka cost, what did you do? Add. Old battery ka carrying amount you removed. Hence the carrying amount of this car is same or it got revised? Got revised. How much was this? All before all this drama, what was the carrying amount of the electric car? 15 lakh. From this 15 lakh, you removed 3 lakh and you added how much? 6 lakh. So what is the revised carrying amount? 18 lakh rupees. Done na, sir? Sir, if the carrying amount has changed, means depreciation will be same or depreciation also will change? Sir, as long as your carrying amount, residual value and useful life, if they are same, depreciation every year also will be same. If any of these three parameters changes, if there is any change in these three, then depre also will change. That means, can we take our old depreciation ka calculation or recalculate? Recalculate. Why recalculate? Because our carrying amount is 15 lakh now or it has become 18 lakh. If carrying amount has got revised, means we can't use this depreciation. We'll have to recalculate. Now, can you help me with the recalculation? And now you tell me, what was the life of the car? 10 years. How many years over? 2 years. So remaining life is 8 years. Now, will you depreciate 18 lakh over 8 years? Will you depreciate 18 lakh over 8 years? No? Why? Again segregate. Why? Sir, this 18 lakh is for battery and other parts. Will the battery last? Other parts can last for 8 more years, but new battery will come only for 5 years. Same life or different life? That means again we need to do the depreciation calculation separately. That only we call it as what? Component accounting. That means from this 18 lakh, again we need to segregate between battery and others. In this 18 lakh, is old battery included now or removed? Removed. Oh, what is only included? New battery. What is the new battery ka cost? 6 lakhs. That means in this 18 lakh, 6 lakh is for the battery. Balance will be for others. Balance means 18 lakh minus 6 lakh. Clear? Now battery ka life will be how many years? 5 years. Other part ka life is, don't say 10 years now. Initially it was 10, 2 years is already over. Now we are trying to calculate depreciation from year 3 onwards. 2 years is already over. So remaining life is only how many years? 8 years. So calculate what will be the depreciation for battery. 6 lakh carrying amount minus residual value 0 divided by life 5 years. How much will be? 1,20,000. What about other parts called depreciation? 12 lakh is a carrying amount minus residual value, I've assumed it to be 0 divided by remaining useful life 8 years. So it will be how much? 1,50,000. These two, if you add, you will get the total depreciation. What is the total depreciation of car now? Total depreciation will be 120 plus 150, which will be 2,70,000. See earlier how much it was? 2,50,000. Carrying amount got revised, so obviously your depreciation also will get revised. This is your component account. This accounting only we refer to as component accounting. Along with this, there came one concept. What is that concept? Replacement parts. Now understood? Now once again summarize for me. Whenever you replace a part, not whole PP, when you replace a part, two things you need to do. What are those? New part ka carrying amount you add, provided RC will be met, which will be met in majority of the cases. And then old part ka remaining carrying amount, if at all you have anything, that you need to. That's pretty much what you have to do. That is what we learned it with the help of a small example. If you need 1 or 2 minutes of processing time, I will wait. Or if you have done means, we shall move forward. Hopefully you're getting no people, right? So yeah. Okay, online also so far I'm not hearing anything. So I'm thinking you guys are good. Next is, sir, if you do any major inspection or overhaul, major inspection, or if you do some major repairs, we call it as overhaul. So whatever you learned here, same concept here. So tell me, what do you do then? So if you're doing, like, or maybe I'll give you an example, then you give me the final print. Now, normally people, if you're in airline industry and all. Now in airline industry, suppose Indigo Airlines, they carry people from one location to another. Now people, if something goes wrong with the aircraft, then people will go to Kailasa or wherever, depending on their karmas and whatever. Yes or no? Now, don't you think government will put some extra restrictions on these entities? Because you're playing with people's life. So hence, especially if you're operating in the aviation or aircraft industry and all, no, governments usually will ask such companies to get their aircrafts thoroughly inspected. Thoroughly, it's not a minor inspection, it's a proper inspection. That only we call it as what? Major inspection or overhaul. All this will not be small amount, it will run into crores because it's a thorough inspection that we are doing. Fine, people. So this is the meaning. Understood the meaning? Now the treatment is same as above, same like replacement part. So what you tell me, what is this? Now this, or maybe one more point, this inspection you'll only get it once or regularly? Or maybe I'll only give you the example. Let's say government is saying, the airline companies, you have to get the inspection every 5 years. Airline companies have to get the thorough inspection done every how many years? 5 years. Fine. Okay, that only we are calling it as, we're giving a name as what? Major inspection, or we can also call it as overhaul. Okay, major repairs or major inspection. Now treatment, you'll have to tell me two treatments. What are that? Instead of new parts, here you call it as new inspection charges. So new inspection charges ka cost you will add. Old inspection ka carrying amount, if at all it is there, what you'll do? Remove. That's what I mean by same as new inspection charges you add, old inspection charges ka carrying amount you minus. Now can we learn that better with the help of an ICA example? It's given over here. It's there in your book. Same thing. Just keep your calculator and let's try to work it out. Okay. Understood the meaning, no? What we'll have to do? Now we're just applying it once more. Just the calculator is good enough. Now we have a shipping company. Same. When shipping companies also are expected to undergo a thorough inspections, usually. A ship will cost how much? 20 million. With how much life for? 20 years. But they will have to do a major overhaul every 5 years. Ship will come for, what is the useful life of the ship? 20 years. But the inspection, are you getting it once every 20 years or once every 5 years? So the useful life of the inspection is only 5 years. Understood? Okay. The estimated cost of the overall at 5-year point is how much? 5 million. So what they're trying to say is, sir, how much did you pay for the ship? 20 million. So first time when you buy the ship, inspection must already be done. Correct? No. I mean, should we have to immediately get any inspection or it's already done? It's already done. So that means in this 20 million, indirectly they're telling how much is for the inspection. In this 20 million, how much is for the inspection? 5 million. And balance 15 million is for the other parts of the ship. Understood? Other parts of the ship will come for how many years? 20 years. Inspection charges, will you depreciate over 20 years or 5 years? 20 years or 5 years? 5 years. This only again we call it as component account. Inspection ka useful life is only 5. Others ka useful life is 20 years. Done now. Correct? Okay, that means you calculate depreciation for me. Will you take 20 million or segregate? Segregate. Into what? Overall component is how much? 5. Other component is how much? 15. How did they get 15? 20 million total minus inspection charges component 5. Yes, sir. Inspection will get depreciated over how many years? 5 years. Other parts will get depreciated over how many years? 20 years. So now calculate depreciation towards overall now. 5 million carrying amount to minus useful life, minus residual value 0 divided by life 5 years. So how much million? 1 million. What about other parts? That depreciation is how much? 15 million no, minus residual value 0 divided by useful life 20 years. So do that, how much is it? 0.75 million. Correct, Sarji? Yes, sir. So totally the ship ka depreciation is how much? 1 towards overall, 0.75 towards others. So totally it is 1.75 million. Good enough. That's what they've written here, 1.75 million. Clear, sir? Now people, in my battery example, right? Battery, no. Initially, go back to the same example. Initially, when we bought the car, we thought battery will come for how many years? 5. But did that our original estimate hold good, or after 2 years only it went off? After 2 years only it went off. Correct? Huh? But in case of inspection charges, should you have to get the inspection before 5 years only or after 5 years? After 5 years only. Yes, now unless something goes drastically wrong, then only government will step in and say, do inspection. Otherwise, generally you will do the inspection every how many years? 5 years. Okay, no? Now that means you tell me for the first 5 years, any drama will come or everything smooth? Smoothly. Correct? Huh? Work. That means tell me what is the carrying amount of the ship after 5 years? I mean, no accident, nothing. Everything went smoothly. Can you tell me what is the carrying amount of the ship after 5 years? 11.25 million. Everybody got that? How? Sir, for overall, how much are you depreciating every year? 1. For other parts, how much are you depreciating? 0.75. Totally how much? 1.75. Correct? 5 years, any drama or no drama? 1.75 is a depreciation for 1 year. For 5 years, how much? 8.75. Correct? Huh? You bought the ship for how much million? 20 million. For 5 years put together, how much have you depreciated? 8.75. So what is the carrying amount of the ship after 5 years? 20 million minus 8.75 million. How much is that? 11.2. Good enough. Huh? That's how the numbers have been derived. Clear, sir? Pakka, sir. Can I move on to the next, sir? Now 5 years over. At the end of 5th year, what will the government tell? Or at the beginning of year 6, what will the government tell? Get one more inspection, done. First inspection, how much it costed? 5 million. Now second inspection will come after 5 years. Now there is a concept called inflation also. So first inflation costed 5 means second inspection will be 5 only, or maybe a little more. Maybe a little more. That they have told here. At the end of 5th year, when you do the second inspection, how much now it will cost? 6 million. Due to inflation, now government is not charging 5 million for inspection. They are charging how much? 6 million. Okay, na sir? This is new inspection charges. Concept is same as replacement part. Tell me what you will do. This new inspection charges of 6 million. Will you transfer it to SPL or capitalize? This CU 6 million you will capitalize. One more. What is one more? Carrying amount of the old inspection charges. If at all it is remaining, you will need to de-recognize. Clear? So now that means tell me what is the carrying amount of the ship now? What is the carrying amount before new inspection? 11.25 plus new inspection charges. What you will do? Add. So 6 million you will add. Correct? Old inspection charges ka carrying amount you need to minus. But what is the carrying amount of old inspection charges? 0. How? Very simple. This old inspection charges, how much are you depreciating every year? 1 million. 1 million. How many years over? 5 years. That means what is the total depreciation? 5 million. What was the original inspection charges come out? It was 5 million. It has got depreciated to the extent of 5 million. So what is the carrying amount of old inspection charges? 0. I mean, should we have to remove or not required? Not required. That's what I've written here. Carrying amount of the ship is 11.25 million. New inspection charges ka 6 million you will add. Old inspection inspection charges you will have to minus. But is there any carrying amount remaining, or it has got fully depreciated? It's got fully depreciated. Hence, should you have to minus anything or not? Not. That's the answer. Correct, sir? Any problem? So what will be the revised carrying amount? 17.25 million. Done, 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 done. And now from 6th year onwards, again you will calculate the ship ka depreciation in one form or two? Again segregation. Again segregate. Why segregate? Sir, when you bought the ship ka life was 20 years. How many years over? That means other ship ka parts will last for how many years? 50 years. But this new inspection charges of 6 million, what you have capitalized, that has to be depreciated over 5 years. That means again you'll have to do component accounting. Clear, sir? So out of the 17.25 million, you need to segregate how much is for inspection charges or overall charges and how much is for the others. How much is for inspection charges now? 6 million. Because new inspection charges costed 6 million. In this 17.25, if 6 million is for overall, means balance will be for others. Now this you'll depreciate over 5 years, this you'll depreciate over remaining life of 15 years, and the same accounting will go on continue. That's all it is. Done, people. That is what ICA is given over here. If you need a minute, again I'll wait. This is a good question. It can be tested for 2 marker to 5 marker depending on the length of the data. Okay, but still a good one according to me. Can I go for another 10-15 minutes and then give you a break? We'll have a short break, people. 10 minutes ka, not much. No time much. Would that be okay, no? Yeah. But now if you need any processing time, I'll wait. Or if you feel so far good, we'll move forward. Wanna? Maybe before taking a break, we'll have a quick recap once and then we'll break. That's okay? Online also okay, no, Sarji? All of you are there on the same page? No issues? A simple hi, yes, good should be fine, which should help. Sometimes there'll be some connectivity issues, people. So at least give some message, especially online. A simple yes also would be fine for me. But that way I'll know that at least we are not facing any technical issues. Yeah. Okay. So they're saying fine. Okay. Cool. That means I'll move forward. Next, what is next? Maybe this we will cover off this and maybe we'll break. Measurement at recognition. Sir, measurement at recognition we can say, or we can call it as initial recognition of PP. Initial recognition of PP. Very simple, same as AS10, no change. Sir, initially every PP. Yes, correct. Correct, Yuvraj. Exploration assets, we have separate standards. It will not come here. Correct. Can proceed, Saru? Okay. Sir, initially every property, plant and equipment has to be recognized at cost. Doesn't matter whether it is machinery, furniture, AC, GC, bearer plant, whatever, doesn't matter. Every PP initially has to be recognized at cost. Now, cost for this purpose, if you want, we can segregate it into 3 categories. ICS puts it into pointers. So I've just put it in chart format for our better understanding. Cost for this purpose means there are three segregations you can do. One is purchase cost, DAC and DSR. Same we used to use in our intermediate also. Purchase cost, DAC and DSR. We'll go for each category. Sir, purchase cost, can you consider it as a cost? Of course, if purchase cost, if you exclude, means what else will remain? Correct, no? So purchase cost will form part of this particular cost of PP. But when you purchase the asset, sometimes you get rebates and trade discounts and all. No? So if you have any rebates or trade discount, you eliminate that because we don't pass any separate journal entry for trade discounts. It is reduced from the invoice price itself. So if at all you have rebates and trade discounts, reduce it from the cost of the asset if it is given to us. Similarly, when you buy the asset, you also need to pay our Nirmala Sitharamanji will say, give me GST, right? So if it's a non-refundable tax, meaning if you are able to claim ITC or no. If you are not able to claim your input tax credit, we are calling it as non-refundable tax, meaning you paid a GST and you are not getting credit for it. If such GST is there, means you add it to the cost of PP. Basically, if input tax credit, if it is not available, you can add that GST to the cost of PP. Otherwise, don't add. So, non-refundable taxes or on those GSTs or taxes where you cannot claim credit, you can add it to the cost of PP. This becomes the net purchase cost of the asset. This is the first section. Any questions here or okay? Comfortable? All this. There's also one type of question which ICA asks. They will give you like maybe 7-8 types of cost. Delivery charges, so GST, handling, installation, like this they will give. And they will say, what is the net cost of PP for initial recognition? So you need to tell which all cost can be added, which all cost should be excluded. Okay, so for that we need to know the provision. First, if purchase cost, will it form part of the cost? Yes. Rebates and trade discounts, if it is included, what you will do? Exclude, minus it. Similarly, non-refundable taxes, meaning if you're not able to claim the input tax credit, then you will add it. But if you can get the claim the ITC, then you will not be able to add it because it's not really a cost. No? Because on one hand, you are paying, another hand, if you're claiming credit means, where is the cost? You have not spent anything there. So such input tax credit wala taxes, you cannot add it to the cost of PP. Another one is DAC. What is a DAC of full form, people? Same terms we used to use it before. DAC means directly attributable cost. Directly attributable cost, we call it as DAC. Okay. Now, when you buy an asset, not only purchase cost, you'll also incur certain other costs like transportation charges, installation charges. Correct. Now, all this will be there. No. Now, you have learned all this. Transportation charges and all, what you'll do. You'll suppose I'm buying a machinery from Japan. I'm buying a machinery from Japan. I mean, that machinery has to come from Japan to my India office. For that, I'll have to incur some transportation charges. Correct. So, suppose I spent about 10 lakh rupees for transportation. That 10 lakh, will I transfer it to P&L or capitalize? Capitalize. Because that comes under which category? DAC. DAC, some of the examples of DAC could be your installation charges, delivery, transportation charges, etc. etc. Meaning is very simple. Sir, when you buy the asset, immediately asset may not be ready. When you buy the asset may not be immediately ready. Those costs incurred, those costs which are incurred to make the PPE ready, those costs incurred to make the PPE ready to use is called as what? DAC. Very simple. Okay, now same example. I bought the machinery from where? Japan. Now people, can I, just because I placed the purchase order and paid the money, immediately can I start using the asset, or asset should first come to me? From Japan, it has to come to my Bengaluru factory. Unless I pay transportation charges, will it come to my factory? No. That means unless it comes to my factory, can I use it or I cannot use it? So transportation cost is required to make the asset what? Ready to use. Ready to use. So such costs, such direct costs which are incurred to make asset what? Ready to use. That only we call it as what? DAC. There are people. But keep in mind, it's not any cost. It is what? DAC. D here stands for what? Directly attributable. That cost should be directly related to PP. Only those costs which are incurred to make that asset ready to use. Who will use the asset? Company or management. So those costs incurred to make the asset, who's ready? Management ready to use. That only becomes a DAC. And DAC, will you transfer it to P&L or capitalize? Capitalize. Yes, sir, people. Okay, now let's say that machinery is little fancy. It is little big. So, in order to logistically make it feasible, it came by part. Big asset, big asset we can't transport as one piece. We have to transport it as a small part so that it becomes easy to transport. Okay, let's say that machinery has 50 parts. It has 50 parts. It came as one machinery or 50 parts. From Japan, it came to my Bangalore factory as 50 parts. Now, for me to use that asset, first I need to assemble those parts. In order to assemble those parts, I have to probably hire a technician. Technician may charge some consultation charges. So technician cost, let's say I paid about 15 lakh rupees for assembly charges. Technician assembly charges. That 15 lakh, what you will do? Transfer it to SPL or capitalize? Capitalize. Why? Unless the asset is assembled, can I use the asset? And this technician salary required for me to use the asset? Yes. That means it is an example of what? DAC. So that will also be get capitalized. Basically, cutoff point is very simple. Till the asset becomes what? Ready to use. Any directly attributable cost you will go on capitalize. Keep in mind, it should be directly attributable. But overhead cost? Overhead is a direct cost or indirect cost? Overhead cost and all we will not capitalize. Unless they say in the question. If they say just overhead, you will capitalize or P&L? P&L. But sometimes they will say overhead cost, but it is directly related to the asset. Then you can capitalize. But that beats the purpose because the very meaning of the word overhead is indirect cost. But We can't question the question. ICA Zindabad. So sometimes they frame the question like that. If they say overhead cost is directly related to PP, then only we will capitalize. If they just say overhead charges, then capitalize or don't capitalize? Don't capitalize. Rather, such cost will go off to P&L. Getting the difference? It will come. All this will come as a question later on. Just discuss it. So DAC ka meaning, everybody understood? Some of the examples of DAC is given here only. Can we quickly run through this? Okay, first one. Cost of some of the examples of DAC. Cost of site preparation. Cost of site preparation means? Now let's say people, I am installing a machinery in my factory. My factory is like this, Humpty Dumpty. Now can I install machinery there or first I have to level the land? Level the land. That becomes an example of site preparation. Now you tell me, unless I level the land, can I install the machinery? That means for me to use the machinery, first I have to incur that leveling charges. This is directly related to the machinery ka usage. In order to make the machinery ready to use, is the site preparation cost necessary or not necessary? Necessary. So it becomes what? An example of that. Yes, sir. Next, delivery charges, handling charges. We have already discussed this. These are absolutely required to make the asset management ready to use. Hence, you will what? Capitalize. Installation charges, same. Professional fees, same. One more thing you need to probably take is, now let's say people, if you remember, I used to give this example in our intermediate. Let's say I'm in a pharma industry. Cipla, like let's say I operate in a pharma industry where my business is to produce some tablets, okay, or some medicine which can cure fever. I'm in a pharma industry. I want to produce what? A tablet, a medicine basically to cure fever. For that, I have purchased a machinery. I purchased it from, let's say Japan. I've imported the machinery. Now people, before I sell the tablet to the public, I need to test. I need to do some testing. In order to do the testing, I'll have to incur some testing charges. Correct, no? I'll have to hire some scientists to put in some chemicals and do the testing whether my tablet is curing fever or not. Clear? Let's say I spent about 45 lakh rupees. How much? 45 lakh rupees for testing charges. What should I do? That 45 lakh ka testing charges, will I add it to the cost of machinery or P&L? Capitalize or P&L? Capitalize or why? Sir, thus AS IND AS 16 ka simple funda is you will capitalize such cost till the asset becomes ready to use. Till the asset becomes what condition? Ready to use. Now only after testing only I can conclude that what? Whether machinery is ready to use as per management. Whether machinery is functioning the way management wants or not, we will be able to confirm only after the testing. Yes or no? Without testing, can I say machinery is working as per management or cannot? Cannot. That means what? Even testing charges is an example of DAC. Testing charges is an example of DAC. So whether testing charges passed or testing failed or doesn't matter. Testing charges can be capitalized. Or maybe just to give you one more example. I did first testing. I did a first testing. How much I spent? 45 lakh. Failed. Failed means my intention was that medicine, that tablet should cure fever. Let us say that tablet is not curing fever. It is giving headache. Instead of curing fever, the tablet is giving headache. That means, is the machinery producing a tablet as management wants or it is not? So testing failed. Will management keep quiet now or do one more testing? Maybe they'll change the composition of certain chemicals, hire new people and do the one more testing. Yes or no? So first testing we spent 45 lakh and it failed. What will you do for that failed testing charges of 45 lakh? Still capitalize only. Till the time asset reaches what condition? Management ready to use condition. All direct cost you can go on capitalize. Though the testing failed, you'll still capitalize. Okay, sir. I did one more testing. Testing charges number 2. And this time I spent 70 lakh rupees for it. I changed some new chemicals I put in and did some composition change. How much we spent for second testing charges? 70 lakh. Past. Past means now that particular tablet is curing fever. I'm able to conclude this after second testing. Okay. Now the second testing charges of 70 lakh, what we will do? Capitalize, because only after the testing you can say asset is management ready to use. Both the testing charges, 45 lakh testing charges 1, 70 lakhs of testing charges 2, both will be capitalized. That's what they will be. Done now. Got it, everybody? Because testing charges also is an example of DAC. One is that. Another one, no? Let's take this example a little further. First testing charges, how much did we spend? 40, or maybe I'll take this example. For first testing charges, I'm assuming we spent 1 lakh. It failed. First testing charges ka result is failure. Because my tablet is curing fever or it is giving headache. Let us say even it's a faltu product, correct? No. But even let's say that product also has a market. Yeah. So giving headache to somebody is also business, it seems. Okay. Even that particular tablet which is giving headache, it also has a market. That means we will keep it, we will throw it or sell it. So whatever product we got from first testing charges, should the company scrap it? Should they like ultimately scrap it at zero cost, or can they sell it? Let us say we can sell it for 1,20,000. Assumption. It could be any number. I've assumed it to be how much? That product, whatever product you got it from testing charges, no, that tested product you can sell it for, even though it is not functioning as management wants, there is still a market for it, and we can sell it for how much? 1,20,000. Okay. Now use your common sense. Testing charges, are we transferring it to P&L or capitalizing? Capitalizing. That means the tested product sold also, we will not transfer it to P&L as an income. We will reduce it from the cost of PP. Because this 1 lakh is a outflow. If outflow, if you are adding means inflow, you will do the opposite, which is what? Minus. So any testing product sold ka money if you have received means it will not be transferred to P&L as another income. Rather, it will be reduced from the DAC itself. Meaning from the cost of PP only you will minus. Done now. And don't go centi. So we spent only 1 lakh. But tested product sold is 1,20,000. Okay now. So don't go centi. IND AS 16 is a very simple approach. They say testing charges you add. Tested product sold ka revenue you minus. Amount is irrelevant. Simply addition and deletion, irrespective of the amounts. Done na sir. This is a carve out. This is a what term I'm using? Carve out. You remember when we started the session, we said India has not copy pasted IFRS. IFRS is international standards. Have we copy pasted or made some changes? Made some changes. So as per IND AS 16, tested product sold, no, you have to transfer it to P&L or you have to minus it. Minus it from what? Cost of PP. But what IAS 16 says, internationals, IFRS basically, what they say is this 1,20,000, no, don't reduce it from cost of PP. You transfer it to SPL. But are we following IAS, IFRS or IND AS? So for examination, we'll have to follow IND AS 16 provision. Sometimes they may ask you the carve outs also. Carve outs are not often tested much in our examination, right? But sir, what does carve out mean, sir? Carve out simply means the differences between IFRS and IND AS. The differences between IFRS and IAS, both are same, okay? IAS are old international standards. Now the old standards, slowly they are replacing with IFRS. Done, people. That's it. So either you can call it as IFRS or IAS, it's okay. The difference between IND AS and IFRS only, we call it as what, people? Carve outs. There are only, I think, 3 or 4 carve outs are there. As and when it comes, I will tell you. That's okay with you. And it's not much tested so far. That's all I could say. Clear? But for our examination, you tell me what you'll do. This 120, you'll transfer it to SPL or reduce? Reduce. Okay, this is the thing. Clear, people? Now we have done this section. We have done this section. This much. Another 5 to 10 minutes more I will take. It's fine with you, so that this section will be covered and we can go into the numericals. So far there, no? Not going into Buddha zone, no? Good. Okay. So what have you covered now? Purchase cost, no? And another one is DAC. Okay. Now people, maybe this one I'll come to it in a bit. Okay, next one is DSR. DSR. Anybody remembers what is the full form? Same thing we have used in Enter. DSR. Decommissioning and site restoration cost, or dismantling and removal cost also you can call it. Decommissioning and site restoration cost. Even DSR cost can be added to the cost of PP. So basically cost of PP will consist of three components: purchase cost, DAC and DSR. DAC ka name is what, people? Full form is directly attributable cost. DSR ka full form is dismantling and site restoration cost, you can call it, or decommissioning and site restoration cost also you can call it, one and the same. What is this? Let's take a small, this DSR concept. Now it was there in your CA Inter also. I had taken you a small example, same example I'd show you here also. But this is tested in a little better way with the problem in our CA final syllabus. So if at all I feel any question from IND AS 16 comes for more than 4 to 5 marks, I think by default DSR concept will be included. DSR is a good concept. There are 2-3 multiple points also it'll get. So usually this definitely will be included in my opinion if it is more than 4 marks wala question. We'll approach that question maybe tomorrow. Okay, first now today let's get the concept done as much as possible. Now what is this DSR cost? It's very simple, people. Let us say our Jio Dana Dan, our Ambani ji. Okay. Now in order to run this telecom industry, we need to have telecom towers. You must have seen the telecom towers. No? That towers only catches the signal and relays it back to us, correct? Now people, have you seen telecom towers installed in the roadside? You see electric poles on the road, correct? But do you see telecom towers installed next to the road, or it's usually put up on top of high buildings? High-rise buildings, they will install the telecom tower. Yes, a little better height. Maybe it catches the signal better or not. I don't know why they do that, but that's what I've seen. Correct? Now, people, let us say Reliance, they want to install a telecom tower on top of one of the apartment building or one building. But that building is not Reliance ka. It is owned by somebody else. So Reliance approached that somebody else and told, we would like to put the telecom tower on top of your building. And Reliance told that particular person, if you install this telecom tower, signal will be better. So that's the benefit you will get. So building owner said, no problem. Anyway, I'm not using the terrace to install the telecom tower on my terrace, no problem. Permission granted. Okay. Now this telecom tower will be just kept up, or it will be fixed to the ground. You'll have to put some proper nut to bolt to and fix it to the ground so that it should withstand air, wind, everything. It should last. No? Correct? So that telecom tower is properly fixed to the ground with proper nut to bolt to get it done. Let's say telecom tower ka, that particular pillar ka life is 5 years. Let me look at the example. It'll be easier. Telecom tower ka life is how many years? 5 years. Okay. Let's stop there, or maybe I'll not show you this, otherwise you'll keep looking at that. Leave that. That telecom tower will come for how many years, people? 5. After 5 years, what will happen? Let's say owner asked Reliance one simple question. Reliance is telling the owner, we will install telecom tower on your building for how many years? 5. So building owner asked the Reliance, after 5 years, what will happen? We will airlift the telecom tower. We will remove that telecom tower. Owner asked, when you remove it, what will happen to my building? Will it get damaged? Reliance told, of course, little will be there. Little damage will be there because that telecom tower is fixed to the ground. No? So when you remove it, there will be certain cracks or some damages which get caused to the building. Now what do you think owner will tell the Reliance? Acha, come. My building was normal. You came in and installed the telecom tower. Now you are saying after 5 years you will remove it. Due to that there will be certain damages. What do you think owner will tell the Reliance? You repair the building. You repair the building. Owner will not bear it, right? Who will bear it? Reliance. Now think. If Reliance says no, I will not incur the damages. I will not repair the damages. will Reliance get the permission to use the telecom tower? Will the building owner, if the Reliance says I will not incur the repair cost, will the building owner give the permission for Reliance to install the telecom tower, or he will not give? That means you think for Reliance, is telecom tower a PP? Is telecom tower a PP? Yes. It is coming for how many years? 5 years. And all the conditions are satisfied. Na? So telecom tower is a PP. Correct? Okay. Now, for that telecom tower, for that Reliance to use a telecom tower, is this repair cost necessary or not necessary? For Reliance to use that telecom tower, is that repair cost not necessary or necessary? Unless Reliance incurs that repair cost, Reliance will not be able to use the telecom tower. That means for Reliance to get the telecom tower to usable condition, in order to make that telecom tower PP ready to use, repair cost is necessary. That means repair cost becomes DAC. Repair cost becomes DAC, but we are not calling it as DAC, we are calling it as DSR. Full form is what? Decommissioning and site restoration cost. It is also like DAC only, but we are keeping it separately. Why is? Sir, installation charges, transportation charges, these are all some of the examples of DAC. When will it come? Future mein or immediately? Suppose I imported a machinery from Japan. I will pay the transportation charges after 7 years, 5 years, or immediately? I will pay installation charges after 4-5 years or immediately? Immediately. So DAC is basically a cost which accrues immediately. But this particular repair cost, is it coming immediately or after 5 years? After 5 years. In my example, yes or no? Yes, everybody. So hence we are not, though it is like DAC only, we are not considering it as a DAC. We have created a separate category called DSR. Correct? Huh? Treatment you already know. Now you tell me this repair cost, will you transfer it to P&L or capitalize? Capitalize, because for Reliance to use this telecom tower, this particular repair cost is also mandatory. So it is also DAC. So what should we do for this DSR cost? P&L or capitalize? Capitalize. But one issue will arise here. What is that issue? Present value, future value concept. What is it? And maybe I'll give you an example over here. Look at this example. Reliance installed telecom tower in a building. What is the cost of that telecom tower? I assume 50 lakh. What is the life of that telecom tower? 5 years. What is the residual value of the telecom tower? 0. All these are assumed number. Only this will come, or also repair cost will come? Repair cost. That only we are calling it as what? DSR. Repair cost will come immediately or after 5 years? After 5 years, the building has to be restored and repair cost is how much? 5 lakh. Correct? This 5 lakh rupees is a value now or after 5 years? I mean, this is not present value. This is the future value. Yes. Now is present value, future value same? Absolutely no. Sir, we are capitalizing telecom tower. We are showing this telecom tower as PP after 5 years or immediately? Immediately. But this 5 lakh rupees is immediate value or after 5 years value? That means this 5 lakh should be added. It should be added to the cost of PP. But can you add full value? Can we add full value? That would be wrong, because this 5 lakh is not the value now. It is the value after 5 years. So what we have to do? You know the concept now. Tell me. DSR cost will you capitalize? Yes. At full value or present value? That's what you need to say. Present value of DSR cost should be capitalized. And how do we find present value? Take the future value and multiply discount factor. Discount factor will be given to us in the question. Okay, now let's assume discount factor is 10%. So how do you find out now, people? How do you calculate discount factor? What is that formula? 1 divided by 1 plus I whole power n. Okay, 1 divided by I here is nothing but 10%. 1 divided by 1.1, press equals to button 5 times. How much is that? 0.6209. 1 divided by 1.1 if you do, press equals to button in your calculator 5 times, you will get this. So 5 lakh is a future value. Future value multiplied by discount factor will give you the present value. So will you add 5 lakh rupees to the cost of PPE now, or only 3,10,460? 3,10,460. Why? Because this 3,10,460 is the present value of DSR cost. That's all as a concept. That means if I go back to the previous chart, so will DSR also form part of cost of PP? Yes, at full value or present value. Present value of DSR cost is what? Transferred to P&L or capitalized? Capitalized. Done, Asarji. Clear?
Yes.
Now, coming back to this example. Look at this example now. How much is the future value of DSR cost? 5 lakh. Present value, how much did we get? 3,10,460. Now, let's look at the accounting. This 3,10,460. No need to copy this. We have 2-3 questions on DSR itself. But that will come tomorrow. So, I don't want to leave it a little bit once we will do of the accounting there. Just observing is good enough. How much is the telecom tower cost? 50 lakh. That is one. What about this 3,10,460? Will you transfer it to P&L or capitalize? So tell me the journal entry for these two. Let's see. PP account debit to bank account. How much did we spend immediately for telecom tower? 50 lakh. So the journal entry, check. PP account debit to bank account 50 lakh. Okay. PP you will debit 50 lakh. No. 50 lakh is a cost of the telecom tower. Even DSR cost you will capitalize at future value terms or present value terms. So add these two, how much it will become? 53 lakh 10,460. So PP will be debited, telecom tower or PP will be debited to the extent of 53 lakh 10,460. But did you spend 53 lakh right now or only 50 lakh? 50 lakh. So to bank account, how much? 50 lakh. This 3,10,460, will you spend it now or after 5 years? Hence, we say we make provision called provision for DSR 3,10,460. Great. Huh? Why provision? Because this is a pakka number or it can change. We are estimating that after 5 years, the amount will be how much? 5 lakh. Since it's an estimated number, we make a provision for this. Clear, sir? This is the journal entry. When will you pass this journal entry? This journal entry, you will pass it at year 1 beginning. You'll pass it at year 1 beginning. Any problem? And now this part is very simple accounting. Telecom tower will get depreciated. Yes. What is the life of telecom tower? 5 years. What is the residual value? 0. So what is the depreciation of this telecom tower? What's the depreciation value? 53,10,460 minus residual value 0 divided by life 5 years. So that means every year ka depreciation is how much? 10,62,092. Will this change every year or same every year? Same every year for 5 years. I've just done it in a columnar format. Okay. This is the first aspect. But hang on. One more catch is there over here. Sir, how much provision have I made in my accounts currently? At year 1 beginning, how much provision have you made? 3,10,460. But after 5 years, is the repair cost estimated to be 3,10,460 or 5 lakh? 5 lakh. If you are expecting to spend 5 lakh, correct? That means your provision should reflect in your books at 5 lakh. But currently, is it shown at 5 lakh or 3 lakh 10? 3 lakh 10. That means what? Because 3 lakh 10,000 is a today's value. 5 lakh is a value after 5 years. So you'll have to do some extra accounting for this. This we call it as unwinding of interest accounting. What is it? Unwinding of interest. So basically, what is the present value? 3 lakh 10. What is the future value? 5 lakh. The difference between present value and future value is time value of money ka interest charges. Is time value of money ka interest charges. That interest charges will be transferred off to P&L. You'll capitalize only how much? 3,10,460. The difference between present value and future value will transfer it to P&L account. So basically what you'll have to do is at the end of fifth year, provision balance from 3 lakh 10, you'll have to bring it up to 5 lakh. Okay. Now how to do that? Very simple. This table we'll use it in many chapters. Okay. So this is, we can call it as ACM table or unwinding of interest table also. If you're not able to remember the names, it's fine. Look at this. We call this as ACM table, amortization cost table. In financial instrument topic, we will be using this for many questions. For now, it's fine. Just observe. It's good enough. How does this table work? Very simple. What is provision ka balance currently in our books? Currently, what is provision for DSR balance in our books? We credited this account for 3,10,460 means its balance will be 3,10,460. Clear, people? Okay. Now, are we expecting to pay 3,10,460 or 5 lakh? 5 lakh. So, what is the difference between 3,10,460 and 5 lakh? Take your calculator. 5 lakh minus 3,10,460. You do 1,89,540, correct? The difference is nothing but your interest charges. Interest charges, where it will go? Paid. But one question will arise. What your number calculator is showing is 1,89,540. How 1,89,540? 5 lakh is a future value. 3,10,460 is a present value. The difference between that is 189,540. This is the interest for 1 year or 5 years. Now question will arise, how much interest you will book every year? Now you can't say equal. So first year ka discount factor, second year ka discount factor same. No, it's a time value of money concept, no? And it is not same. So hence you can't say 1,89,540 is the interest for 5 years and divide this by 5, you'll get every year interest. No, it's not simple average because this accounting is based on time value of money and each year ka discount factor. First year ka discount factor is not same as second year ka discount factor. Now the next aspect will arise is how much will you book as interest charges every year? 1,89,540 is the total interest charges for how many years? 5 years. Each year how much? For that we prepare this table. This table we call it as unwinding of interest table, or you can also call it as what? ACM table. ACM means amortized cost table. If name is not synced in yet, no problem. It will come in many problems. I'll keep repeating that. It will get registered, not a problem. How to work this? Just keep your calculator. What is the provision for DSR balance currently in our books? 3,10,460. So that is the opening balance. Correct? But after 5 years, should this be 3,10,460 or it should become 5 lakh? 5 lakh. What is the discount factor in this problem? I have assumed 10%. So take this number and I multiply 10%. How much is it? 31,460. That is first year ka discount charges. It's very simple if you want it for understanding purpose. It's like you have taken a loan of 3,10,460. Just for easy understanding, I'm telling. You have taken how much loan? 3,10,460. After 5 years, if you take a loan of 3,10,460 now, if it's a 5-year loan, will you pay only 3,10,460 to the banker or you have to pay interest also? This is a principal amount. This is a principal amount. If this is the loan amount, loan ka principal amount means you'll calculate the interest on principal only. How much is that now? What is the loan ka interest rate? 10%. So hence I said these two you multiply, you will get first year ka interest charges or also known as finance charges. Any doubt? That's the first. First year, did you make any payment? First year, did you make any payment or payment will come after 5 years? So hence payment in the first year is 0. That means how much now is the value of the loan? Think from the loan perspective. How much loan you took? 3,10,000. How much interest you need to pay to the bank? 31. Now you have to pay only 310 to the bank or interest also. So what is the loan balance? So these two you are minusing or adding. And balance will become what? 341,506. That is the closing balance of provision. Done now. First year ka closing balance will become second year ka opening. Now this is the loan amount means now second year will you calculate the interest on 310,460 or 341? If the loan balance now is 341 means now you will calculate the interest on 340. Take this number and multiply 10%. That will be the second year ka interest charge. Any problem? Second year, did you make any payment or no payment? No payment. That means what will be the closing balance? Add these two. If you make the payment, the loan balance will be same or it will reduce. Hence check. I have written this as column number 1, this is 2, this is 3, this is 4 and this is 5. How do you get column number 5 ka value? Take column number 2 ka value, add interest charges. When you make the payment, loan balance will be same or it will reduce? Reduce. That means what? How do you get 5? 2 plus 3 minus 4. Here anyway payment is not there. Just say. Clear? Okay. Second year ka closing balance will become? Third year ka? open. Like this you will go on doing. At the end of 5th year, okay, basically now add these to how much it will become? Add these to how much it will become? Only these two. Fine. And you will make how much payment in 5th year? Fine. So balance will become 0. That's the fund. Done, Sarji. This is your accounting or this is your ACM table. This table will give you what? Two things this table will give. Each year ka interest charges it will give. Add all this for me, everybody. Add all this for me. Interest. Each year ka interest you add, quickly you add and tell me how much number you're getting. 1,89,450. What did we say? The difference between present value and future value is the total interest charges. Present value was this, future value was 5 lakh. If you do the difference, it is nothing but 189,540. Same only is giving in your table also. Okay, everybody good? So this table basically gives you each year ka interest charges or finance charges to be transferred to P&L. And also it will give you provision for DSR ka closing balance every year. Provision for DSR is a liability. No? Liability should get reflected in balance sheet. So this number will come in your balance sheet. This number where it will go? P&L. This number where it will come? In balance sheet. That's all as a fund. Okay, sir. This you don't have to worry. There are at least 15, 20, more than 20, 25 questions where this table will be utilized. It will come. I just wanted you to have a little overview of that. Tomorrow also again it will come. Okay. Yes. And now tell me the journal entry based on this. Let's see. Finance charges. If you are confused, finance charges is an expense. Nominal account rules say expense to be debited. So what is the journal entry? Finance charges account debit. Have you settled this? No, you are not settling finance charges. You are settling provision. So the journal entry will be what? Finance charges account debit to provision for DSR. This is the journal entry for each year ka interest charges. How did I get all this amount? How did I get all this amount? From this particular table. This is every year ka interest charges. Correct? Huh? When provision is settled, what is the journal entry? When provision is a liability, when liability is settled, the entries? Liability account debit to bank account. Name of the liability is? Provision for DSR account debit to bank account. That will come in 1st year, 2nd year, 3rd year, 4th year or 5th year? 5th year. That's all. That is the journal entry. You can follow this format for your examination in my view. Okay, now this is nothing but a columnar format ka journal entry. Advantage of this format is, sir, every year depreciation different or same? Same. That means you don't have to write the journal entry multiple times. One journal entry, amount only you can go on changing if it changes. This is your columnar format. Okay. ICAI doesn't follow this. They pass each year ka entry separately, but we will not have so much time. Paper will be already lengthier. So I suggest it's okay. If you have time, pass each year ka entry separately. Otherwise, do columnar format. In my view, it should be fine. Even if ICAI takes 1 marks, let them take. Donate. Our motherboard, 1 mark, if you donate to mother and all, you'll feel bad. Huh? No. Time is more important. Focus on that. 1 or 2 marks here and there, if they take for the format, it's okay. Let them take. Our first priority should be to complete the 100 marks. That's the first line of things that we should target. This is the journal entry for our DSR. Everybody got it? So tell me quick concept about DSR. First of all, DSR ka full form is what? Decommissioning site restoration cost. DSR cost is also DAC only. But why do we have it as a separate category? Because it will not come immediately. It will come in the future. Hence separate category. So total DSR cost, will you capitalize to the cost? Will you capitalize or only present value? Present value of DSR cost you will capitalize. Future value and present value ka difference is nothing but finance charges, which will be transferred off to P&L. Okay, Ji? Okay, so that's what we have learned so far. Now people, so far we have learned only cost ka inclusions. 3 cost inclusions. What are those? Purchase cost, DAC, DSR. Now this table gives what are the cost exclusions. Coster. What are those costs which cannot be included? One you already know. Overheads. Overheads you will include or don't include. That overhead could be general overheads, selling and distribution overheads, whatever. All that overhead cost you will exclude. Okay. And then if you have any relocation cost, reorganization cost, all that you will transfer to SPL. Now let's say we are already using this iPad and this desktop MacBook and all. Now let's say we want to shift our academy from this building to 4 buildings next. Okay. From here we want to shift our building. I am already using my MacBook, correct? That means, is this asset already management ready to use? Is this computer already ready to use as per management? Yes. Now, if this asset, if I'll have to shift it to the next building, I'll have to incur some relocation cost. That relocation cost, can I capitalize? Can I add it to the cost of computer? No. Why? Cutoff is already reached. What is the cutoff? Once the PP is management ready to use, capitalization stops. Capitalization can continue only up to stage. What stage is that? Management ready to use. Once that ready to use condition is reached, after that, if you are incurring any cost, it is not related to asset. It becomes, standard is treating it as a general cost, and it will be transferred where? P&L. That only we calling it as what? Relocation cost, reorganization cost, initial operating losses, etc., etc. All this will not be capitalized, but rather it will be transferred off to P&L. What does this initial operating loss mean, people? Okay. Yeah. Or let's maybe keep it this example. Let's say, people, now we are running a final course. Now I will not do this course at free of cost. I will put Chuna on the academy. Give me some money. Correct. Now let's say academy feels, in order to break even, there must be 300 students. Academy, to recover all their cost, so how many final students should come? 300. Now currently we don't have 300. That means currently it is a loss. I'm just assuming we have recorded students more than that. So I'm just saying. So far, okay? Everybody? Now leave the recorded part. Let's say we have only first year, no, we got only 100 students. Let's assume. We got only how much? 100 students. How much we need for breaking even? We need 300. That means first year it's a loss. First year it's a loss. Let's say we suffered a loss, academy suffered a loss of 5 lakh. Okay. Now this loss, can I add it to the cost of PP? Because to conduct the classes, we need computers and all this, no? So this loss, instead of transferring it to P&L, can I add it to the cost of PP? Understood the example? So can we do it or not? No. Why? Don't take it to heart. Very simple. What is it? Is the asset ready to use? Is PP ready to use? Sir, if you have to conduct the class, means laptop or computer, AC and all should already be functioning, no? So is the computers and other PPs ready to use? Yes. Correct. If it is ready to use, means this cost and all, or this loss and all, can you capitalize or you cannot? Cannot. That is what they mean by initial operating loss. Sir, initially when you start a business, obviously you will make a loss, because you will not get so many students, or you will not get so much, you will not be able to sell so many products, no? So that losses and all, you cannot add it to the cost of PP, because PP is already ready to use. Once ready to use condition is reached, capitalization continues or stops? Stops. That is this funda. Understood? And one more thing is, any promotional expenditure, you can call it as promotion, advertisement, whatever, marketing campaign, whatever, all that will not be capitalized, but rather it will be transferred off to P&L. Because when you do advertisement and all, no, right? Like, let's say for factory opening, we called, let us say, who's the trending now? Pushpa. We called Pushpa to cut our ribbon. Okay, Allu Arjun sir, we called to come and cut the ribbon. Allu Arjun told, no problem, I will come. Just give me 15 crore rupees. Just I will do this. Allu Arjun sir is saying, I will cut the ribbon. Oh, give me how much? 15 crore rupees. We told, okay, it's okay. We can't help it. You come and cut the ribbon, sir. We will give you 15 crore. That 15 crore ribbon cutting cost, no? Can I add it to my factory? See, definitely Allu Arjun coming to my factory opening ceremony will give a benefit. But will it give the benefit only to the factory or overall business? It's an overall business. It's not a benefit directly related to an asset. It gives a benefit overall to the business. Hence, all this marketing expenditure and all, no, what the standard has taken a viewpoint is, though your marketing expenditures give you the benefit, it is not benefit associated with a specific asset. Rather, it's a benefit for the whole business. Hence, all this cost, we don't add it to a particular PP. Rather, you transfer it off to P&L. Any sort of advertisement, any promotion, marketing, whatever you call, everything will go off to P&L. These are cost exclusions along with abnormal loss. If there's any abnormal loss also, the question says that also goes off to P&L. These are some cost exclusions. So far, okay, G? 5 minutes. Can we have a quick recap, break, and then take up the remaining part?
Yes.
Okay. Now this one, all of you should be with me. Huh? Okay, standard name, IND AS 16. That talks about property, plant and equipment. PPE ka definition. Tangible asset held for use. That usage could be either to produce goods or render a service or administrative purpose or rental purpose. The usage should be for more than 12 months. Okay, that's a definition. But in order to show the PPE in balance sheet, there are two more recognition criteria or RC. What are those? Future economic benefit, or for class purpose, we'll call it as FEB, and cost of that PPE, you should be able to measure it reliably. This is one. Few things are excluded from IND AS 16. One, if you have any PPS held for sale, the moment PPE becomes held for sale, IND AS 16 will not apply. IND AS 105 will apply. Separate standard is there. Then, if you have biological assets which are used for agricultural activity, biological asset means living plants and animals. But if they are used for agricultural activity, then you have a separate standard called IND AS 41. Like if you have cows or goats and all, it comes not under IND AS 16 but under IND AS 41. But bearer plant will come under IND AS 16. Okay, sir? Okay. Or maybe one more point over here. Tell me that line once again. Biological assets used for agricultural activity. Okay, specifically the word is biological asset used for agricultural activity. Suppose I'm using tractor for agricultural activity. I'm using land for agricultural activity. Then you can't apply IND AS 41. It will come under IND AS 16. Only biological assets which are used for agricultural activity will come under IND AS 41. If you have normal assets, like if you are using a tractor or an agricultural land for agricultural purpose, the tractor agricultural land will come under which standard? IND AS 16. Okay. And what about bearer plant? Bearer plant is IND AS 41 or IND AS 16 only? IND AS 16 only. For you to call it as a bearer plant, three conditions. From that plant, you should get some agricultural produce. You should get that produce for more than 12 months. You should sell only the produce in the ordinary course of business. The tree should not be sold in the ordinary course of business, only except as a scrap sale. Okay, then what did we learn? We looked at spare parts and standby equipments. What do you do for spare parts and standby equipments? RC is met, PP. Otherwise, you classify it as inventory. Day-to-day routine repairs and maintenance and all will go off to SP. If you have any replacement part, if you are replacing any part, two provisions. What are those? New part ka carrying amount you add. Old part ka carrying amount you remove. Same concept for your inspection charges also. Okay, next what did we learn? We went for initial recognition. Initially, every PPE is recognized at cost. Cost for this purpose you can categorize into three. Purchase cost. If you have any rebates and trade discount, minus. If you have any taxes on which you cannot claim input tax credit, then you can add. Then DAC. DAC also you can add. DAC of full form is directly attributable cost. Some of the examples, DAC means those costs which are incurred to make the PP ready to use. From whose perspective? Management perspective. DAC example is site preparation charges, delivery charges, inspection charges, assembly charges, testing charges. But tested product sold you will minus. Testing charges you will add. Tested product sold you will minus. Okay. Then DSR cost. DSR cost ka full form is decommissioning and site restoration cost, or dismantling and site restoration cost also you can say. Is DSR cost added? Yes. Full value or present value? Present value of DSR cost you will capitalize to the cost of PP. Difference between future value and present value is time value of money ka interest charges. That will go off to T&L. Okay. How much is the interest charges? You will get from that unwinding of interest table. Okay, next to cost exclusions. Some of the examples of cost exclusions are general administrative overhead, selling and distribution overheads, abnormal loss, any marketing campaign cost too. Okay, relocation cost, reorganization cost, initial operating loss. All these are examples of cost exclusions. Yes, people. I think for now it's good. So we have 2-3 more concepts remaining. All questions. So we'll take about, it's 8:20. Can we come back by 8:30? 10 minutes break. That's okay. All right, so come back in 10. Thank you.